Hey guys, Boris Huss from BK Forex. Welcome to our Forex Weekly Technicals for 04/7/4/11 of 2014. Where are the trades? Well, very interesting week, of course, in the market this week with the euro getting hammered a little bit, both on the ECB meeting, which took us down. Oops, let me just get rid of all this stuff here that comes up. Here's the euro chart, which took us down to the 3700s, and today probing a little bit below 3700 on reports that maybe the ECB is considering $1 trillion worth of QE. It's unconfirmed reports out of a German newspaper, but that was enough to push us down post the NFP trade, which was basically in line and kind of really did not produce the volatility that everybody expected. Anyway, the euro, certainly in a downtrend on a weekly basis, on a daily basis, definitely looks lower, but we are entering a very critical support juncture, and really further selling only commences after we break support here. 36.65 is sort of the support that everybody's looking at, but frankly, it's really got to be 36.50. If we take out this 36.50 zone and take it out with a vengeance, like in other words, I think we've got to be 36.30, 36.35 in order to meaningfully break the support here around the half-figure number. Only then can you kind of be convinced that you have further downward action and you can expect further momentum all the way out, of course, now to 36. But the big momentum, the really big move will be down to the 3,500 as the week progresses. Is that possible? Of course, that's possible. But for now, there's definitely some chunky buying underneath 37s, and it's probably going to be support underneath 36.50s. Who's buying the euro at this point? Reserve banks, Asian central banks who are not price sensitive, who just want to get prices at very decent prices. People who feel that ECB is all talk, no action. Assumption perhaps that even though the U.S. data is okay, it's not good enough to really move the Fed anytime soon. The critical thing, of course, here is going to be the 10-year U.S. yields. It's really now going to become the bond market call on where the currencies go, because at this point I think all the cards have been played. The market knows exactly where the fundamentals are on both sides, and it's a question of whether the yields are going to really start to pick up, at which point, of course, that's going to attract value to the dollar, or they're going to just simply lay there fallow, basically thinking that the Fed, for all its talk, is going to do nothing for a long time, even if they kind of temper QE. So it's going to be a yield play. We're going to have to watch 10-year, I think, as probably the most critical factor now in further currency moves, at least certainly against the euro and against the yen. Now, speaking of the yen had a big failure today, and this is a really interesting trade here. Let me just pull up, where's my yen here? So post NFPs, look at this. It's a really ugly, nasty flip, and that is a very much emblematic of the fact that the yields turned. The yields turned, and so did the yen. And in many ways, as I've been saying this for a long time, until and unless the U.S. 10-year goes close to 3, it's difficult to foresee dollar-yen coming up to the taking out the 105s. So we've had all of this massive yen rally, and we were very fortunate. We took advantage of this yen rally really well last week. But now the yen rallies came to a crushing halt. We took out the lows of, I believe, is it 1, 2, is it 3, almost 3 days on the lows? What's the low? 30. No, we just stopped short of a 3-day low. So 103.08, the low from 3 days ago, is going to be obviously a very natural target of the shorts on Sunday night when they open up Asia. And it definitely looks to be like that we get a little bit of we're going to get a test of the 103s, at least in Asia. And perhaps even the 102.50s. Remember, the 102.50 breakout, this was the congestion zone. We took out the 102.50. Really led to this multi-day rally in dollar yen. And today's very ugly, very nasty turn did a lot of technical damage. So we have to see how well we consolidate. Having said this, though, I think we clearly consolidate here. On a short term, this may look ugly, but on longer term, it still looks much more constructive, because effectively, I think we consolidate somewhere around here, creating a higher low, creating still longer term, more viably positive picture, because we're making higher lows, higher highs continuously, and only if we just literally flush all the way down to 101.50s and pretty much create fresh new lows against this wave, can you say that this was just a truly failed rally. So for now, it looks corrective, and actually probably 102.50 bids would not be a bad place to for bargain hunters here in dollar yen situation, but certainly in the near term, the momentum is to the downside, and 103 definitely stands as a possible test as we go along. We don't have that much data, of course, next week. It's all really going to be, I think, driven primarily on market momentum flows and bond momentum flows. Cable, very, very quiet. Cable has been a very much stepchild in this process, just sort of not really playing a lot of attention. The volumes and the volatility in cable have been very, very narrow. We are holding above the 65, and I think that's relatively productive. As long as we hold the 65, that essentially creates a better, higher top, higher bottom formation here, sort of a consolidation, and a potential here to kind of run further up. But really, cable is a very consolidative trade here, and unless we break the 65 to the downside or we take out the 67 to the top side, it's very rangy and choppy to trade. Very difficult to try to handicap the price action, and probably best to be just left alone for the time being. Aussie was surprisingly robust today. The fact that we just stayed tough to this 93, we tested 93 to the top side, and suggested maybe there's more juice left in the calm dollar trade. Certainly what was interesting was that in many ways I thought it was the fact that U.S. yields did not perform well, and of course Australian yields continue to perform well. This remnant of the carry trade flows is possibly what's driving this strength to the calm dollars. In other words, calm dollars still kings of the yield. The dollar may still be a while before it begins to be a yield instrument, and that makes them attractive on a relative basis. So you saw this, these big moves here. What is interesting, I think, aside from the fact that Aussie took out 93s, is the return of the calm dollar relative strength. So we saw Euro Aussie, which we were also kind of very lucky to trade today, go down to the downside, test the 47s, came back up. So now this, I think, becomes a very interesting trade here, because the weakness in the euro, if we do see further weakness in the euro, one of the more interesting weaknesses in the euro, I think, is going to be through the calm dollars. And if this 47 is given, we really put ourselves on a potential path towards the 45 handle. And that is a really interesting distribution. We, of course, have the one big event this week, which is the Australian employment data. That, if that is positive, could be one of those triggers that could create more movement towards this 45 move on the trade. Very, very big distribution, clear distribution here suggests that, hey, the world still loves Aussie for yield, and B, that the euro certainly showing some relative weakness on a basis. Now, the other thing is about euro relative weaknesses that's kind of interesting is to kind of watch it against the pound. So here we had this failed retrace rally at 83, came back down to 82.50, and I think we don't have too much cable data, we don't have that much euro data, but if we sort of again get more rhetoric, more conversation about the potential that the ECB is really ready to pull the trigger, these levels are going to be very important. And I think this level is going to be very important. This 82.50, of course, near-term short, but a break of the 82s would really create a much more negative euro structure and could push us down further. The New York City Ambulance Corps agrees with me. Okay, so that's where the euro stands. That's where Aussie stands. Now let's take a look at the one last thing that I sort of want to look at this week, which is dollar CAD, which had performed very, very well today because we had really good Canadian employment data, and then got a little bit nipped by the fact that that IBPMI was a little bit lower. But still, the CAD has really come back from the dead. This 102, which we talked about quite a lot over the last month and a half, being the very much top of the range, certainly has proven to be. But now the 109 is the very big support. Whether the CAD can break 109 is really an open question mark. But I think that's really sort of the next key level in the CAD move. And of course, that also brings up the idea that, Euro CAD to the short side, same as Euro Aussie to the short side, is an interesting trade here, especially through this 150 level. The 150 is definitely an interesting give, but the real big support is 149. So Euro CAD clearing 149 to the downside opens up a run all the way out to 147. Very similar story. It looks to be, at least as we open up the week for trade for next week, that the euro relative weakness, especially the calm dollars, may be the continuation theme to trade as these levels, as these levels are given. That's the critical thing. So we'll see how well they be tested. We'll see if they're given. If they are, I think there's more juice to those trades as we go along. So that's pretty much how the week shapes up. Not too much data on this set, but the one the key thing we have is the Australian employment data, which could certainly enhance the calm dollar trades as we go forward. Wishing you guys the best of luck, the best of trading. Boris Schlossberg, over and out.